Kenyan farmers, the seasons may remain uncertain, but with climate risk insurance, their future doesn't have to be. For KTN, I'm Paul Thiongo.
All right, now that story leads us into our conversation of the day, where we are looking at insurance for farmers. And joining us is Mary Kweimu, who is the Senior Manager of Prudential Supervision at IRA. Thank you so much for joining us today. So before we even get into the conversation, we've had the story by Paul. And when you look at that story, from where you sit, what comes to your mind? Where are we in terms of insurance for farmers?
Insurance for farmers has not yet actually picked up so much in Kenya. As you may be aware, generally even insurance penetration, when we are talking of the entire insurance without now segregating to insurance for farmers, insurance penetration in Kenya, it's still a bit on the lower side. At around 2.34 there, which means this is the contribution of the insurance to the country's gross domestic product. So that is the whole of the gross premiums written by the insurance industry in Kenya. So when we come to the insurance for farmers, it's still a bit low. And I think, as indicated in the feature, lack of awareness is a major issue, because most people, they've not really understood how insurance operates. Most people view insurance as an investment, that I'm investing my money expecting a return, without knowing that this is a risk management technique. We are faced with risk in our life. Whatever we do, even as we walk along, those are risks. So insurance is used as a risk management technique. So most of our farmers, they've not yet really understood that. And I think there could be also an issue of not getting the correct information from the people who are distributing this insurance. And that's why, as an authority, we've really invested heavily in consumer education. And we have a team that is fully dedicated to create awareness amongst Kenyans. And we visited all the 47 counties just to inform Kenyans, the ordinary Kenyans, about what insurance is all about, the benefits of insurance, what are your rights as a consumer of insurance, and before you purchase insurance, what are you to look at? Because unlike other products, what you are buying is a promise, and you are paying for an event which may happen in the future, may not happen. So it is important for people to really understand those intricacies of insurance. So one major issue is that issue of lack of awareness. And then talking about the pastoralists who are on the move. So it's even difficult, it becomes even difficult to even create awareness amongst them, because they have to keep on moving with their livestock. Yeah.
All right, Mary. So now let's get into the conversation and understand what is insurance when it comes to agricultural insurance, first of all. And I believe by the end of the conversation, everyone needs to understand why they need to get insurance as a farmer, right? Okay, so first of all, what is agricultural insurance and why is it important for farmers in Kenya?
As we are all aware, agriculture is the backbone of our country. So it is important for our farmers to ensure that the risks that they face are adequately managed, so that as a country, we don't lack food. And unlike let me call them the conventional or traditional insurance, which are based on the actual laws. If you insure your vehicle, for you to actually be put in the same position that you were in before the accident, the laws must have actually happened. But for agricultural insurance, it is based on an index. Let's take an example of the rains. We witnessed a lot of rains last year. So let's take an example of that rain. When it comes to index-based insurance, it is based on the probability of an event happening, whether the loss has actually happened or not. And this, for that event to actually be measured that it has actually taken place, there must be an independent party. It doesn't come from the farmer and it doesn't come from the insurance company. So in this case, we can say like the Kenya Meteorological Department, who will say that during this period, this was the amount of rainfall that was received, which was either very low or it became too much. So in agricultural insurance, they agree on a predefined amount to be paid should that trigger actually take place. Yeah.
Okay.
Yeah.
All right. And as you've explained, when it comes to, because insurance is a safety net, right?
It is.
It is a safety net. So what happens to a farmer who has lost their livestock? The way you've mentioned about the floods,
Yeah.
a farmer who had a farm and the crops have been washed away, the livestock is not there, the livestock have drowned, and the farmer doesn't have anything. So when it comes to how they need to approach insurance now,
Yes.
what goes into that?
If a farmer had that agricultural insurance in place, so the person selling the insurance explains that there is this particular trigger which will trigger for the payout to actually take place. And they explain that this trigger, there is no bias because it's not the insurance company that determines, neither is it the farmer. It is determined by an independent and reliable source. So the person selling explains to the farmer that if the rainfall or the heat reaches a certain point, then you are eligible for a payout. So the company now comes in and there is no investigation, there is no adjustment, there is no assessment because the trigger has happened. And this trigger is being determined by an independent party. So immediately it happens, then the company automatically pays out the agreed amount that they had entered into when they were entering into this insurance contract. Yeah.
All right.
Yeah. So there is that predefined amount which must be paid should this trigger actually happen. If it is the rainfalls, assuming the rainfalls in this season were below, and the Kenya Meteorological Department actually confirms that, then the company has no option but just to pay. They don't have to come and ask the farmer so many questions, trying to do some investigations, trying to do some adjustments, unlike the traditional insurance, whether the company must be satisfied that the insured event actually happened. So for this one, as long as that trigger has been reached, then the company pays out the predefined amount.
All right, Mary, let me hold you right there. We're going to go for a short break, but don't go too far. We'll be back. Remember, we are talking about insurance for the farmer. We'll get to understand this as we go on a short break.
Tufanye kazi pamoja na tukue pamoja kuimarisha Kenya ni jukumu la Kenya.
At the end of a long and weary day, when the world has taken its toll, there's a place that beckons with open arms. Home. Here, time slows down and we find comfort. It's where we find protection and protect those we love. It's where our hearts find solace, our spirits find peace, and our souls find contentment. Experience safety, security, entertainment, and more for the whole family. Go to my Safaricom app to find out why it feels good to be home.
I&M Bank app now or visit any I&M Bank branch and open your account today.
All right, welcome back. And this is Farm Kenya. You're still with us right here on KTN. And today we are talking about insurance for farmers. And joining us is Mary Nkoimu, who is a senior manager of Prudential Supervision at IRA. Thank you so much for still sticking with us. And now, before we went for break, we were speaking about we're trying to understand insurance and the options that are there. Now, let's continue and look at even the types of agricultural insurance products that we have in Kenya.
Yeah.
And you can break them down to us so that at least we can understand what we have.
Okay, thank you. Generally, the index-based insurance, the key factor there is the index. Now talking about the poultry farmer who was in the show at the beginning, where she talked about the temperatures. So if there is a way in which this temperature can be measured by an independent and reliable source, then they can take insurance for the poultry. And say that, you remember when she said that if the heat is too much, yes, or if the heat is too low. So if there is a way in which that temperature can be measured, such that if the temperature exceeds, then they can get the payout. Yes. Or if the temperature is below, then they get a payout. The one advantage with the index-based insurance is that it can use any index as long as there is an independent and reliable source to verify that. So we can have insurance covering the fluctuations in the rainfall, that is for the crops as well as for the livestock when we talk of the foliage, such that if the rainfall is too little, they are not able to get the grass, or if it becomes too much, it has an effect. We can talk about drought insurance. Should there be prolonged periods of drought, that it affects the animals, it affects the crops, we can have drought insurance. And another important thing that we need to notice that index-based insurance is complementary to traditional insurance. So as a farmer, you cannot say that I have index-based insurance, so I'm not going to insure my equipment. You need to insure your farm equipment so that should there be a failure on those equipment and they are not able to harvest, then you are not going to lose out because the crop has overstayed in the farm. Most of the, how do I put it, these seedlings shops, when you are buying some of them, they used to have some element of insurance such that should it not work as expected. Like the poultry farmer, she talked of some vaccines. So it is important to ensure that you, as a farmer, you combine the agricultural insurance with the traditional insurance. There is also the element of fire, where she was taking of using the jiko. Should anything happen and that place catches fire, it was a risk because there are newspapers, there is timber, and then there is a jiko there. So should anything happen and that structure catches fire, then she can lose everything. So she can combine the index insurance, have a fire insurance. The chicks can also be stolen when they are almost maturing. So they can combine that and have together with the theft insurance. So index-based is not a solution for the farmers. It is a complementary to the conventional insurance such as theft, fire, and such other traditional insurance.
Okay.
Yes. Yeah.
All right. Thank you so much. And you've simplified between the index and the traditional form of insurance.
Yeah.
And now let's also move and look at small-scale farmer, because small-scale farmers are the largest that we have in Kenya. And when it comes to insurance, someone might say, okay, I'm a small-scale farmer. My farm is very small. Why do I need insurance? Or am I really even eligible to get insurance? So when it comes to eligibility for insurance as a farmer, what goes into the requirements?
Okay. Thank you very much. As an authority, I said at the beginning that we have a mandate to promote the development of the insurance industry. And sometime back, we realized that the conventional insurance companies, they were targeting those people in the white-collar jobs who have a salary and they are able to pay premiums at the end of the month. So as an authority, we introduced a category of insurance which is targeting the small-scale people, those people in the informal sector who don't have a salary on a monthly basis. These companies design products which are aligned to the cash flow of these people in the informal sectors, which is affordable. So if you are a small-scale farmer, you are not left out of the insurance safety net, because there are products that are also geared to the small-scale people and those people in the informal sector who don't have a monthly salary. So we have some companies, we've licensed some micro-insurance companies who are their target market are those small-scale people. Risks happen to anybody, whether it's a small-scale farmer or a large-scale farmer. And for the small-scale farmer, it's even worse, because should anything happen, then these people are pushed further into the poverty line. So it is important, more so for the small-scale farmer, to ensure that they are able to manage these risks so that should anything happen, they are able to bounce back and continue with their businesses. Yeah.
Right, and still on the small-scale farmer, how do we ensure that at the end of the day, a small-scale farmer knows, okay, this is what I need to do, this is what I need to put on my farm or put in place in order for me to get the insurance?
For the micro-insurance, the process should be very, very simple, such that even a person who does not understand anything finance is able to understand. So as an authority, our micro-insurance regulations require those micro-insurers to simplify all their processes, including even the claims payment. Should an incident happen that a claim has to be paid, it should be extremely simple because of the target audience for those products. So for these companies which we are targeting, and that's why we said the conventional insurance, we only gave them a transition period which is over. So all the conventional insurance which had a micro insurance, they've set up, those who are interested and really wanted to do this kind of business targeting the small-scale farmers, they've established subsidiaries which are run separately, and their processes should be very, very simple. And the language they use in their documents, not the complicated insurance jargon or having those fine prints which only resurface at the time of a claim. So we require them to use very simple language. If it is the claims process, it should be extremely simple to ensure that should the insured event happen, then the policyholder does not suffer, but is compensated as fast as possible to ensure that they are able to continue with their livelihood.
Right. Now, I'm a farmer.
Yes.
I've gotten the insurance. Now, how do I make sure that I get the payouts?
Normally, when we advise all insurance companies, before they sell to you, they explain to you, should there be, and should the insured event happen, this is how you have to go about it. And more so for the small scale people, the small scale farmers and those in the informal sector who may not have the time to peruse through all those documents. So disclosure is very, very important. And as an authority, we emphasize that companies disclose all these processes prior to entering into a contract, such that should anything happen, you as the policyholder, you know exactly how to go about it and where to get the information that you actually need to be able to lodge a claim and ensure that you are compensated promptly.
Okay.
Yeah.
Now, to a farmer who is in the rural area, how do they access insurance? And when you look at how is it accessible when it comes to this? Because someone is in the rural area, they're like, okay, insurance, those are for people in towns. Someone is in the rural area, they're not able to maybe access roads and network often. So how do you make sure you get to that farmer who is in the rural area?
Thank you. In the insurance industry, we have various players in the value chain. We have the insurance agents, and these agents are spread across the country. And they access even the rural areas. So most of these insurance products are distributed through these insurance agents whom are licensed by IRA. And these agents, they represent the insurance company. So when an agent approaches the person, they say, we are selling this product for this particular company. So we have agents who are spread across the country, representing insurance companies and distributing the products. Sometimes back as an authority, we had a project where we trained potential insurance agents, because they are required to do what is called a certificate of proficiency, to be able to appreciate and understand what actually are they selling. So as an authority, we invested in that project and we moved around all the 47 counties, training people, because these are the people who are on the ground. They are people who can go where you are saying there are no roads. They're the people who speak the language of the people in those areas. So as an authority, we went through that project, that process, and we trained all the agents. Also, as I said at the beginning, we have our consumer education, in which the authority has invested very, very heavily. And in our engagements, we normally have what we call champions. These are people who are trained, they understand insurance, and then we use them as ambassadors to spread the message. We train women group, we train youth leaders, we train cooperative members, so that they are able to spread the message to their members, such that they are able to know there is this insurance, and if there is an incident, how do I go about it? So in our consumer education activities, we normally tailor our education programs to the needs of a certain category. Then we have those groups, then we can have champions from that group who will be going to spread the message. And if there are any challenges, we have contacts with them.
All right. And before we even move on, because you've mentioned that you've trained across all 47 counties, how do you follow up with this the trainees, the ones who've been trained at the end of the day? Because you might find some counties are performing better when it comes to insurance than others.
Yes.
So what could be the disconnect?
There could be various factors because, as I said, some of these people, especially when the youth leaders and all that, this may not be their core business. So as you say, there might be a lapse here. But we normally have some champions, and we do a survey just as a follow-up to see whether what is really happening on the ground since the last time we were there.
All right.
Yeah.
All right. Thank you for that. Now, let's move on and look at the claims. Now, you mentioned about the ground. Now, let's look at the claims.
Yeah.
A farmer has lost their crops or their livestock or even equipment due to various factors. How do they place or file a claim?
As I said at the beginning, we require these companies to inform them because insurance, the purpose is to manage the risk. It's not actually collecting the premiums. So we require these companies to tell the person that should this and this happen, this is what we expect you to do. If it is a form they fill, and there are these agents who sold the policy. They can get in touch with the farmer or with the policy holder and collect the information that is required. But the company has the responsibility, because by the end of the day, this insurance company is the one who will pay the claim. The ultimate responsibility lies with the company to ensure that that particular person who has suffered a loss and required to be compensated is actually compensated. So they are to follow up and ensure that they get all the documentation or all the information that is required to actually process this claim and pay the person. Yeah.
And how soon can they get compensated after they've filed the claim?
It varies, but the law requires them to pay them within 90 days.
Within 90 days?
That's what the law requires, but it can take, some companies can pay within the shortest time possible.
All right.
Yeah, for the index-based insurance, that one is very fast because there is no investigation, there is no assessment, there is no adjustment. The trigger has happened, the independent body has confirmed that the payout was agreed at inception, so you just pay the farmer. The conventional insurance is where now there may be, because as I said, conventional insurance, it is based on the actual loss happening. So that one, the company must be satisfied that we are paying a genuine claim.
All right.
Yeah.
Okay, and for example, circumstances or mistakes that lead to denied claims or delays in payouts. What are the circumstances?
In the conventional insurance, it could be that maybe the person never paid the premiums. It could be that the cause of the loss was not actually insured, issued of records. So those are some of the things that can lead to a delay.
Okay.
Yeah.
All right. And as you look at the 47 counties, when you look at the number, of course, the 47 counties, what are some of the counties, or which are some of the counties where insurance, the type of insurance that you're speaking about, is really performing very well? And what could be the motivator of the performance?
Generally, insurance seems to be concentrated in urban areas, in Nairobi and cities Mombasa, Kisumu, Nakuru, Eldoret. These other counties, it's not so much growing, but it's something which, as an authority, we are encouraging our companies. And another challenge is because most of our companies are based here in Nairobi. They have their head offices in Nairobi, and their systems are centralized. So even when a business or a risk, let's say there is a risk in Kajiado, you find the company has grouped Kajiado as part of Nairobi. So business from Kajiado is reported as business from Nairobi. But we are now, for us to be able to make an informed decision and guide the industry, we are requiring companies to actually report where the risk is. But if you look at the current trend, insurance tends to be concentrated in urban areas. Yeah.
And when it comes to programs that are being set up in order for insurance to get to and penetrate into different areas. I mentioned some of the programs that are there and the ones that maybe could push insurance to be accepted in other different counties.
I think education is very important. Some countries, they start training the children about insurance at a very early age, just as they talk about savings and all that. So education is very important, such that as children grow up, they appreciate what insurance is and the role that insurance plays. But people just grow until when you have maybe your first vehicle, then you are told you are required to have an insurance for your vehicle. So you see, we tend to take insurance as a luxury, not a necessity. So education is very important. If we can incorporate insurance at an early age, so that as children grow up, then maybe we can boost insurance intake.
Okay.
Yeah.
And of course, we cannot finish without speaking about exploitation from providers, from insurance providers. Any cases of that, and how does the authority make sure that this is not happening? Because you might find someone who doesn't use the insurance because they say the people who sold it to them were exploiting them.
I wouldn't really call exploitation, maybe misrepresentation.
Okay.
Because the agents whom I talked about, they're paid a commission. So they may want to sell to you a product which may not be appropriate for you, but for them, they earn a higher commission. But we urge the insurance companies to do what is called a needs assessment. When it comes to insurance, you know, there are those obvious things like, let's say, approaching people who've retired and you want to sell to them education policy. It doesn't make sense.
Okay.
So we normally ask the companies to make sure that in their proposal form, they have a section on needs assessment. They just ask questions to determine whether this, whatever you are buying is really appropriate or it is being driven by commissions.
Okay.
So that element of misrepresentation is an area which can really arise. But those experiences are there, but we urge Kenyans not to, as they say, you don't throw away the bath water with the baby. Just because you've had a bad experience with one company doesn't mean that you are no longer going to manage your risks. So as much as that bad experience has happened, let's continue.
Okay.
Yeah, because insurance is there to manage they're the experts in risk management. So why carry the burden when you can transfer it to someone else who is an expert in that area?
All right.
Yeah.
Very well said. Now, let's look at the Gazette notice. There was a Gazette notice about revoking the license of 20 brokers,
Yes.
about 20 brokers.
Yes, yes.
You can explain to us what that was briefly, and so that we know, was it misrepresentation or what was it?
Okay, thank you. For the insurance brokers, we normally issue them with an annual license running from 1st January to 31st December. So if these entities do not apply for renewal of the license, so for assuming for you as a policy holder or as a Kenyan, this broker had a license for 2023. This broker has not applied for the license for 2024. In 2025, they are still there. So we normally go through our database and we look at this broker applied for this license during this time. They've not renewed their license this year. You see, by 31st December, the license has lapsed. So come 1st January, they are trading illegally. So if we go through our books, we get in touch with them first before we actually gazette. So there is a process that we follow before we actually gazette them that we've revoked these licenses. Yeah, so the reasons could be many. Maybe someone tried the business, it wasn't working well, and before there is normally a guarantee which they put. So before we release that, we make sure that all liabilities have been cleared. So there is a process that we follow before we actually revoke those licenses.
All right, Mary, our time is up. We have now to conclude this particular conversation that we were having. That is Mary Nkoimu, who is the Senior Manager for Prudential Supervision at IRA, speaking to us about insurance for farmers. I believe you've learned something today. My name is Kelvin Nyakundi. We've come to the end of this particular edition of Farm Kenya. Stick to KTN even as we continue with the other programs that we have today.
Mlango wa kulima kuwa mshindi.